Over the last few weeks, we've talked about a number of different taxes in South Africa. In those videos, we touched on provisional tax. And the question is this an additional tax that you need to pay on top of all your other taxes? In this video, we're going to clear up the confusion. We're going to talk about provisional tax for individuals who are doing business and registered companies. We're going to touch on what provisional tax is and what it's not, who needs to pay it, how it works, why it exists, and how to register for provisional tax. Let's get started. Let's start with the biggest misconception. Provisional tax is not a separate tax. You do not pay income tax and then provisional tax on top. So what is it then? Provisional tax is the method with which you pay your income tax bill. So instead of paying one big lump sum after your tax year, provisional tax allows you to make 2 installment payments during the tax year. So think of it as progress payments that you make towards your annual income tax bill. So who needs to deal with the provisional tax system? There are 2 main categories: individuals and companies. Let's start with individuals. Generally speaking, if you earn income that does not have PAYE deducted from it, you need to register for the provisional tax system. Let's go through some examples. So you have sole traders, freelancers, independent contractors, anybody who's a hustler, an entrepreneur, and you're making money in your own name as a sole trader, and you're earning income that is not taxed under the PAYE system, you're going to need to be part of the provisional tax system. Property investors, if you have a property and you're earning rental income from it, or if you have a number of properties and you're earning a significant amount of rental income, you will need to register for the provisional tax system. People earning large amounts of interests and dividends. So if you have a lot of interests and dividends and you cross certain thresholds, you may be required to register for provisional tax. Companies. So companies are simple. All registered companies are required to sign up and be part of the provisional tax system. What this means is from the moment your business starts trading and is registered, it is considered a provisional taxpayer. So why does SARS have this system? It serves 2 main purposes. For SARS, it provides a more consistent flow of revenue collection throughout the year, rather than having revenue collection once every year and a big payment from all the companies. It helps them with their collection efforts and also to manage their cash flow internally. For you, it helps you to also manage your cash flow in making smaller payments throughout the year, rather than having a tax shock at the end of the year after your assessment and have a big payment to make. It encourages you to manage your taxes and budget for tax as you earn your income. So how does it work? It involves estimating your total taxable income or your profits for the full year and making payments using an IRP6 form. The estimates can be tricky, especially for the first payment, because you're calculating based on, let's say, your previous year's results or what you anticipate you're going to make. If you have deals in the pipeline and contracts that you've just signed and you anticipate you're going to make an X amount of money and your profits are going to be based on that. So you estimate. The payment deadlines depend on who you are. Individuals and trusts will need to make the first payment by the 31st of August. So that means you need to estimate your profit or your taxable income, submit the IRP6 form, and make the first provisional payment by the 31st of August. The second provisional payment is due on the 28th of February. That's the end of the tax year. For companies, the first provisional payment is due 6 months after the end of the financial year. So it's based on the company's financial year. If the financial year of the company ends in June, then the first payment is going to be 6 months from June, that's in December, and the second payment will be at the end of the financial year in June. The third optional payment that you can make will be after the year end, and you realize that your actual taxable income or your actual profits were higher or lower, if they were higher, then you will want to make a third optional payment to avoid penalties and interest when you do your final income tax return. Remember, the third payment can be made after year end and before your income tax return is assessed. How do you register? For individuals, you basically need to notify SARS the moment you become a provisional taxpayer. And you basically do that by activating the provisional tax on your e-file. For companies, they're automatically put onto the provisional tax system when you register for income tax. For some people, they get confused when they submit their taxes and they get an audit or they get penalties and interest. If you look at your income tax return, you may find that it does say provisional taxpayer and it's marked as yes. That's going to be based on what you put on your income tax return, and SARS will see you as a provisional taxpayer. But because you haven't submitted your provisional tax forms and payments, you are then charged penalties and interest. All right, let's talk penalties and interest. So penalties and interests come in place where your estimates, for example, are too high or too low. SARS has a margin of error, and if you fall outside that margin of error, you will pay penalties and interest. That's why the third optional payment is in place for you to top up. But even with that, if your estimates were far outside the margin of error, then you might be paying penalties and interest. Late submissions. The first payment is due on the 31st of August. If you submit your form on the 1st of September, you will incur penalties and interest. Remember, 31st of August means the last business day in the month of August, or the last business day in the month that is due for companies. So late submissions will incur penalties and interest. Late payment. If you submit on time, but you pay late, you will also incur penalties and interest. Tips and tricks for businesses and business owners. It's important to have good basic bookkeeping in place. It will come in very handy when you need to do those estimates. Remember, estimates may cause you to have penalties and interest. So it's basic bookkeeping needs to be in place. Cash flow management. It's important that you take tax payments seriously and you include it into your cash flow management. For two reasons. Number one, you need to make sure that the money is available when you need to make the payment. But more importantly, you need to know how your business is actually performing. If you are using your taxes in your business to pay for business expenses, you're not actually gauging whether your business is doing well or not. In some cases, you may be running a business that's not liquid, and you won't know until you actually start managing your cash flow correctly. So it's very important that you have that in place. We help businesses with their provisional taxes, their income taxes, estimates, and bookkeeping. So if you would like to just have a chat with me, you can click the link in the description below and book a free consultation where we'll go through your business and just have a quick chat. If you found this video useful, please like the video. And if you have any further questions that you have, please leave a comment, subscribe. This will help other entrepreneurs and business owners just like you to find this content. I'll see you guys in the next one.